Good morning, everybody. Happy Friday. We made it. All right, what's happening, everybody? Happy Friday. Welcome back to the Daily Profit Plan. Screen share is up. Let's get the chat up for everybody. Okay, chat's open for everybody. Good, good, good. What's up, Blake? Good morning, Blake. Hey, Jeff. Hey, Andy. Dr. Barnes, Jana, Kathy, Dennis, Roy, good morning. Aurora, Alan, Michael, good morning. Let me bring up some real-time gamma this morning. Looks like we have a slight, let's see, we need price to stay above 69.45 today. Our larger gamma levels going into today's expiration. Monthly expiration today, weekly and monthly. And then we have the VIX expiration next week on Wednesday, 69.80, 69.70 seems to be gettable today. Market kind of limped in yesterday, which is not awesome. So we had that gap up the day. This is what you have to remember for where the day starts, right? The day gets excited. We have a positive day. It can stay positive all the way back to here. So even though the market gave some of it back, as long as we stayed above that line, it is considered a positive day. Now, we see this as like, oh man, the market went bearish for the day. Well, intraday price action did go bearish, but the market clocks this as a positive day because of the open price. So those are important things to remember when it comes to how a day closes, how a week closes, how a month closes. Like, remember where those break-even levels are at. Okay. All right. We had a great masterclass yesterday. Didn't have enough time, so we're doing another masterclass today. So let's get to that really quickly. So engineered options. Had an awesome class yesterday. We went for about 90 some minutes. Then I had to run to another meeting. I'll do another class today. We have another follow-up master class today. Engineered options masterclass day 2. We'll do it at 12:30 p.m. Eastern time. Okay. So I'll see if we get that one posted. Let me ask Deanna right now. Yesterday's engineered options. Hosting another class today, 12:30 p.m. I'll have notes to post as well. Okay. So we'll get that posted this morning. Yep. Team just came in. We'll get a host this morning. No, Jeff, we're still going to do it on Monday. Markets are closed on Monday. We're still going to be doing live sessions. I'm going to do 2 classes on Monday. I'll do an engineered options class in the morning at 11 a.m. And I will do a project options edge class. I think I'm going to do just like 11 a.m. Eastern time and a 1 p.m. Eastern time. And that'll be my instruction block for the day. Markets are closed, so the good thing is we can just focus on pure education. Okay, waterfall income. We won't have a class on waterfall income. There's no trade on Monday. So what we'll do is we'll just have a class at 11:30 on Tuesday. Okay, so for Monday, I'm making a little note here. So Monday, market holiday with MLK Day. So market holiday, no DPP or daily profit play, no waterfall income because the markets are closed. I'll have a 11 a.m. engineered options class and a 1 p.m. This is all Eastern time. Project Options Edge. Okay. So today, 12:30 p.m. Eastern Time, masterclass number 2 on engineered options. Have a great weekend, obviously. And then we're coming back Monday, even though the market's closed. Class, 11 a.m. Eastern Time. For engineered options, we will get ready for the trade on Tuesday. We'll see if there's anything, at least futures market, if it's open, if it's not open. But Monday night, going into Tuesday's trading day, I will have the engineered option trade ready to get posted by 9 a.m. So pre-market Tuesday, we'll have trades ready. Waterfall income, we will do Tuesday, 11:30 a.m. class. And then daily profit will resume Tuesday, 9 a.m. Eastern Time class. Fair? Do a recording of yesterday's 7 p.m. session. Uh, Possibly somewhere, Venkat. Let me see. We have a. All right. So let's see if we can get a recording for that. Let's go to some pre-market gamma this morning. Positive, negative pivot around 69.45, pretty much right where we closed yesterday. We're looking at a small gap up with like a 0.15, 0.16 futures market. So we'd be a little bit higher than this. If we see some positive gamma for the day and positive flows, then 69.70 to 69.80 seems to be gettable. VIX had a pretty big retreat yesterday. So from 18.12 VIX all the way down to 15. Keep an eye on this morning. We're hanging out around 15.73 right now. Recenter this is 69.44. Took a winner on that iron fly yesterday. So let's go 15.73 VIX. So as long as the VIX doesn't rally too hard, about a 0.98% move, kind of the ups and downs. Let's see where that takes us for price today. All-time highs around 86, 69.86. Is it possible that with an OPEX today that we could get some flows into, 69.80 again? I mean, hopefully, yes. 69.80 looks good. 7,000 is right there. Just not sure if the market can carve it out, all today or if it takes into next week. But we will see. That's the plan, Chuck. We'll see what today's price action does. Obviously, what would be really nice today is if price is up today. Let's say that price ends up going back up towards, let's say 70, 75 or so. Our trade with the timing of having a few days left to expiration and going into 1 day of trading left. I mean, options market are pretty sophisticated, and knowing that there's only 1 day of trading, the expected move for Tuesday, if we're up to like 70, 75 or 80 today, the expected move for Tuesday is probably going to be like a plus or minus, 20 to 30. And if we're up to 69, 70 or 80, our trade needs to stay above 35. Or if you're in XSP with me, it needs to stay above 694 or 693. The expected move should not be able to come back and get that. So if we wanted to hang on to it for Tuesday, we're probably looking at like a 90+% chance of profit on those trades. Okay. If prices are gap filling today and we're hanging out at 69, 20 or 30, then I'm going to let it ride into Tuesday because I'd like to see if Tuesday can obviously get a nudge to the upside. So the easier trade is if we're up here and we're going to collect most of the credit, hopefully that will give us, 85, 90+% of our max credit. And I would be totally fine taking profit, near the end of today. And then just taking a fresh trade on Tuesday. But if we are, down in this area around our break even, I don't want to close the trade for break even. I'm going to let the trade work to Tuesday. Hopefully Tuesday will be a slight bump to the upside. Yep. So we'll talk about it. It'll be updated in Telegram, whatever we're doing. Okay. Let's see here. Okie dokie. So what else is going on? Let's go to we do have a couple. Let's just highlight some earnings. I do also want to take a screenshot of this if anybody's interested. So I just ran a screener yesterday to kind of see, okay, let's focus on some quality companies in 2026. Just ran this. This is a free screener. Everyone can have this. I can share the link if anybody uses FinViz. I'm looking for a market cap over 2 billion, so mid to large, right? I want to see positive earnings growth. I want to see positive sales growth. I want to see insider transactions positive. So I want to see, basically executives buying their own shares. I also want to see that it's optionable and shortable, which means you have lots of liquidity. Average volume typically like over a million, but if we're still getting a little bit lighter volume right now, I want to go over 500K. So it's a pretty robust and again liquid instrument that's optionable. Target price, I want to see that analysts and discounted cash flow models are showing that current price, the analyst price, the target price is higher. So we have obviously upward direction. I'm not looking to necessarily short anything. And then outlook for the next 5 years is positive. So I want earnings growth. I want revenue growth. I want everything trending in the right direction. And then at the very least, and I can toggle this off, but it is helpful when things are above a 50-day moving average that it shows that a buy zone is pretty strong. And we have about 65% of S&P stocks above the 50-day moving average right now. So from probably thousands of stocks here, I've got a list of 47. Okay. So these are in alphabetical order. If I wanted to go by market cap or I want to go by price, I can sort that. But there are 47 stocks, which is going to be on 3 pages. I have this share. I have this link favorited, and I can share this if you want. Does anybody use FinViz? If I share this link, this should take you to the same screener I have. So this will be a FinViz screener. And if you type in that link, let me know if that pops up and works. That should give you a filter of 47 companies. These to me are, I would say, just I'm scanning for high quality. And then, of course, from here, I would go in and dive a little bit deeper into, okay, are they high quality? And also, what do the options chains look like? Right? Do we have options every week? Are they liquid? Is the bid ask relatively tight? That way we can have something we can trade. And I want to take a look at these kind of individually. Now these have all probably had more upside than downside. But like looking at AMT, for example, I mean that's showing recent downside, but popping up from like 175 to 180 or so. Aramark, that's is that like the old? I feel like that's the old what is it? Amway, Aramark, Amway. Specialty business services where you exploit all your friends and get them to buy stuff from you. Atlantic Union Bank shares. Let's see. So anyway, there's 47 stocks. Oh, hang on 1 second. My dog's about to throw up. 1 second. Okay. Sick dog bench. You good, Grossy? Oh, uniforms business. All right. Well, that was fun. If anybody has a French bulldog, you probably know what I'm going through. All right. Trump Emergency Power Act for semis. Yeah. So anyway, I just did this screener last night, and I'll do a deep dive and see if there's any that are kind of actionable that I like to take a look at. But at the very least, fundamentally looking pretty strong. I can also do a scan here with my snowflake analysis and get into. Let's see. Let's go screener, and we can kind of pick and choose like which one kind of. I mean, it's not going to be perfect, but if you want a little bit of everything, like something kind of minimum healthy here, maybe one more notch. So kind of in this ballpark or better. We'll go US for liquidity, and we got 42 results. So another way to kind of get some decent scans. I mean, Snowflake wise, these look pretty good. Cash flow wise, let's see. So a couple ways, Snowflake filter. Um, Valuations, we can sort, what's price to earnings, preferably something in like the maybe 8 to 15 zone for price to earnings. So some valuation that could be, baked in. If stocks are down, like this is what I'm never interested in. If stocks are down like 50 plus percent, sometimes there's a reason for that. And I don't like to necessarily chase beat up stocks. I mean, I know that there's that game of value versus growth, but oftentimes when a stock is beat up, it's like I'm not looking to buy stuff that just sits and does nothing. And it might pop up, in a year or two or three. But if it never does, that's like the most frustrating trade, to lock up a bunch of capital in what, should you think go up, but it never does. We've had a really strong bull market since 2020, right? We've had, I mean, honestly, since like 2015 was the only time the market was really sideways. 2017, 2018, 19 outside of volatility up. 2020, COVID stimulus like crazy up. 2021 up. 2022 correction, deleveraging. 2023 4 5 up. So, it's like for companies to not participate in a lot of this, it's like, yeah, I mean, there's something wrong, which is why this whole narrative of a major rotation is coming, right? That doesn't mean it's a bear thing. It's just like markets are probably looking to get away from so much concentration in Mag 7, so much concentration in tech. US is primarily a tech and service-based economy. I saw something last night that I want to say the top 10% of earners in the US are spending like 49% of consumption, are responsible for almost 50% of consumption. We truly are in a strong, and now the data is showing like the K-shaped economy is very real. You've heard it. You're, finding yourself like, where am I? Where am I on this K? But the highest of earners and the highest owner of assets are really loving this economy, and they're actually quite bullish on everything. And obviously, it's an inflation hedge to have ownership of assets. So anyway, we'll play around with this stuff. Okay. All right. So earnings next week. Let's take a look. Let's go earnings whispers calendar. Let's see what's on the calendar for next week. We will go to the 20th. All right, let's see some highlights here. List view. There we go. So next week earnings. This will make newsbreakers a bit more exciting. We got to trade in for Microsoft. We are still playing around with earnings next week that are mostly going to be financials. But we hear, DHI home builders are likely going to be incentivized if the government is going to step in and kind of help as well. I don't know what that looks like, whether they're going to incentivize the builders or they're just trying to give, the consumer price breaks, which isn't a good thing. If we give consumers, hey, everyone gets a house credit, first time buyer house credit. They've done that crap before. All that does is get priced into the house. So that's good for home builders, but ultimately the consumer doesn't even realize it. Like, oh, it's just tax write-off, right? But your prices went up by $10,000, $15,000. So we'll see. But home builders should be doing pretty well. Supply side has been an aggressive plan the last few years. So Lennar's, DR Horton's, Toll Brothers, Pulte have all been really good stocks to trade. I don't mind taking a look at the kind of the basket here. I don't think that one is necessarily better than the other. I've seen Toll Brother homes. I've seen DR Horton homes. I've built two Pulte homes myself. We have a builder out here in Utah. There's Symphony Homes out here. There's Sago. There's others. Ivory Homes is another one out here in Utah that's kind of that same like builder grade home stuff. But we're still in the financial space for most of the earnings dominance. So let's go to this is Tuesday next week. Wednesday, Netflix aftermarket on Wednesday, United Airlines. So Delta had earnings this week. Netflix has earnings on Wednesday next week. We can take a look at that one. I'm long on Netflix. I did a ratio spread for my Project Options Edge. I wouldn't mind actually, trading Netflix. As far as I think the simpler play would be just looking at getting long on Netflix. If not for earnings specifically, like longer term, I think that Netflix is still a strong company. I don't. They tend to get a decent amount of love out there, and most people probably have a Netflix subscription, or you're squatting it somewhere. But you see how we're still in the financials. So Netflix, yes. Airlines, yes. DR Horton, yes. But everything else is still banks. That's all next week. So it's banks are not super volatile when it comes to earnings, but we start to get a little bit more exciting later on. Here we go. So Johnson & Johnson Healthcare, they've had a rip of a stock the last 6 to 12 months. Halliburton for some energy. More banks. Regional banks are kind of interesting to trade as well, just based on a position. Kinder Morgan, that's in the energy space. More banks, more banks, more banks. Lots of banks. Thursday, Procter & Gamble, GE Aerospace, FCX, that's copper, that's gold, that's silver, that's copper. That's a strong one. I've got some Project Options Edge in that one as well. Abbott Labs, I'm long on that one. More banks. Right. Friday next week. Intel. You know what? I actually have some expirations today that I need to address. I'm going to roll some calls on Intel. I bought the stock back at like $18, but silly me, I cover the shares at like 25. So I was treating it initially like an income play. I still have the shares. I'm looking to roll the calls out and see if I can collect some additional income. It's at this point, my break even is so low. It's kind of free money. Where I rolled out by 30 days, 60 days, 90 days. If I can pull another, $1, $2, $3 of credit, I'll just keep rolling some calls. I do have some trades that'll be closing up officially for Project Options Edge today. If we go into DTE, Progressive, we have a ratio spread that is expiring today for full profit, $210. Okay. Project Options Edge, that'll be at full expiration. So let me make a note here on Telegram. Project Options Edge. Okay. Expirations. Project Options Edge. 116 expirations. This would be trade management. We have several expirations today for full profit. PGR. Ratio spread for 210. Okay, what else? IWM. Ratio spread for 201. Ratio spread for 201 credit. Okay, looking good there. Nike. Ratio spread for 106. $6 credit. So it's going to be, these are all good. Like Nike's trading at 60 some dollars, 47.50 by 46 for $6. That's a full winner. IBIT has some shares. What's price at right now? Price is up to 54. I have the 51 by 52 bull call spread. Or I'm sorry, 52 by 51 bull put spread. That's 52 cents. That'll be full profit. IBIT bull put spread for 52 cents. 52 cents. I want to keep an eye on that one today. SPY. This one's expiring. This is a 111. I did this for Project Options Edge. We got a buck $1.68. This trade's been open for 92 days. So this was one of those like VIX flare ups. I threw this in for a little profit trap below the April lows. So it's going to be full profit. So SPY 111 trade for $1.68. Anything else in January? The 494, 84, 70. Looking good for a full $1.68. Good. I don't need to close these. I'll just let them expire today. Tesla, I think. Let's see. All right, I'm going to go Tesla individuals. What else do we have here? 360, 360, 360, 350. Those are all to May. Those are out further. I got a lot of trades on Tesla. Let's run a little. All right, I'm going to check Tesla individually. I think I have some calls to roll on Tesla. So add that in. So Tesla roll, Intel. I need to roll. Tesla, I need to roll. Maybe Coca-Cola. I think I need to roll Coca-Cola as well. Keep going here. Amazon. Ratio spread for $1.53. $1.53 credit. So these are all winning trades. This is good. QQQ should be another 111. Yep. That is for $1.18. So I'm just typing this up as I go in project up to the Telegram. SPX. This one is another, this is a 1111 SPX 1111 trade for 50 cents credit. Also, this is an expiration for waterfall income strategy 2. We'll have a full expiration today, hitting profit, which is nice. Costco, the ratio spread, that was worth a decent amount. It's up $430. Ratio spread for $4.30 credit. Anywhere between, let's see here, this one, so 660 by 655 for 430, 660 by 655 for 418. So I'll put 418 to 430 credit. Next, Micron ratio spread for $1.69. Coca-Cola, I'm going to do some rolls here. I have the call at 65. I'm going to roll this again. It's free roll really, so I'll roll that one. Adobe ratio spread for $1.95. Nvidia, gonna roll some calls there. So it's going to be a busy day today, which is good. And then, yeah, so rolling those 130 calls on Nvidia. Home Depot, 290 by 280 for $1.70. MicroStrategy. This one's going to be a loss. It's a bull call spread that didn't quite get there, but my ratio spread was worth $300. So that actually washes this trade, which is fine. So there's no harm on that one. Futures that expires today. That's a hedge. That's worthless. Pepsi ratio spread. I know it's opening bell. We gapped up to 69.63. I'm watching my other screen. I'll see where some gammas are at. So Pepsi's a ratio spread for $1.10, $1.18. Dutch Brothers. So that's Bros ratio spread for 99 cents credit. Lululemon, 210. Full profit on that today. Intel, I'm rolling. Hims ratio spread worth a buck 25. It's a nice winner there. Every account's going to grab about 350 bucks. Nice. Snapchat. Let's see here. It's not getting called away at 9. Puts are not doing me any good. I'll just have some more calls on Snapchat. Okay. Add some more calls there. Apple. Oh, I gotta roll some calls in Apple. It's not bad. I'm up 22,000 bucks on Apple. I'll roll some more. What else? DT. Taking a couple losses at pinch. DT is going to be a loser. Okay, write that one down. Pinch. So define risk loss on DT. SYY, define risk. That's fine. That's annoying, but whatever. DT, SYY, taking a small loss there. XSPR, engineered options. There's our expiration. Okay, so that's my list. That's a lot. And then I'll be rolling calls on Intel, Coke, Snap, Tesla, NVIDIA, Intel, Tesla, Coke, NVIDIA, Snap, Apple. But that's a nice chunk of profit. So right now, winners, all these trades are expiring today for winners. That's a pretty good way to bring in the new year. 210, 201, 106, 52, 168, 153, 118, 50, 418, 169, 195, 170, 118. About 2,500 bucks to kick off this year. Not a bad little injection. And that's just with one contract. So if I had one contract, it's 2,500 bucks. I did, 2 contracts, double that. So not a bad way to start off the year. Okay. Sandy, I didn't see that email. What email did you send it to? ChrisPulverPub@gmail.com. And if you find the email, just forward it to me again. This is the email, ChrisPulverPub@gmail.com. Certainly didn't mean for that email to get lost in my inbox, but usually that's my only inbox that I'm like zeroed out. Other ones like for as you would imagine, years of stuff. It's hard to get ahead of promo emails and stuff that pop in. But anyway, closing these trades last week, need to cash the account mark. That's totally fine. Yep, that's totally fine. Logging back in here. Penny says working link to One Trade Mastery so we watch for the weekend. Of course. Where's my guy Stacy at? Stacy, you got that link handy? No, I have it right here. One Trade Mastery. Here's a video link. One Trade Mastery. Okay, there's a link for you. I'll post it in Telegram as well. Our second line admin. That's right. The prior link stopped working. I'll watch over the weekend. Okay. Let me know if that one works. That one trade mastery link should work. That's a 70-minute video. So check it out. Cool. All right. Let's go real time. Here is pre-market gamma. As long as we're above 69.45, things are looking pretty encouraging to the upside. Real time gamma. Check this out. So, 7,000 is a big level pre-market. Real time, the bigger sticky point is going to be here on 69.80, which is testing those highs from yesterday. Okay. So let's see if we can get there. Let's have a look and see. Plus minus on the day. I didn't catch the pre-market this morning, but let's go SPX. VIX is probably flat. We're talking about the 15.7 VIX. We're at 15.4, so we've retreated a little bit. I'm showing a plus minus 20 on the day, 19.8 right now with live price. Let's see. I mean, 7,000 is a 7 delta. What are we doing today? Are we going to go to 69.80? We're going to try to sniff out 7,000. Is it going to be like another nothing burger day? That's a 7 delta. I mean, we're gapping up again on the day. So I want my call side to kind of be a little bit safer. And for me, that safety is going to be, above 7,000. If I'm trying to put a call spread on here, I want it to be above. A put spread, can we get something for like the 25-20 zone right now? Maybe that's might be the simpler play today. 25, maybe something along these lines. If I go 25, 15 there. Let's see, 40 cent. I'm going to go broken wing butterfly. I think I'm going to sprinkle in 2 broken wing butterflies here. Let me see if I can get 50 cents. Right now, that's about a 9 delta. Give me something. So that is break even. No. So I'd have to go 5 wide there. That's a 9 delta. I don't want to settle for 30 cents. I'm going to try to take 50 cents out of this one here. And then I'll sprinkle in another one. So I'm going to go 2 broken wing butterflies. Ideally, this gets filled. Come on, bro. It's probably better if I just did credits. Let's go. That's worth 20 cents. That's worth 35. Ugh, gross. So I can get 50 bucks on the day, as long as price stays above 69.20. I'd rather build in a bit of a broken wing butterfly if I could. So let me go 20, 15, 05. That puts me at a break even around, that's 40 cents. Gosh, give me 50 cents, would you? Yesterday's SPX butterfly was, you want more of those? I mean, those trades are fine, Gloria. They are really good. You typically don't have to risk a lot on those iron flies. The only issue is you can only let price drift, 10, 15 points, and then you start to get, risk on that trade. So, the iron flies are great when price is very concentrated and it stays right in that wheelhouse of like 10 to 15 points. But if we move a quick like 10, 15, 20 points, that's going to be just, it's small risk, which is not a bad thing. So again, as always, there's always a trade-off in options. If you want to, if price is very concentrated, you take a high credit up front and low risk as a net result, which is a good trade. But time passes, it stays within that range. Then yes, you can pull 50 bucks out of that trade, 100 bucks out of that trade. I mean, you pulled $12 plus or $12 into credit. So that's a good way to have low risk. But that's not a trade I certainly want to sit on all day. I don't like sitting on those trades all day because any direction is going to put it out of that butterfly trap, which is the iron fly. Okay. All right. Let's see here. I think we can get this one filled. I'm going to try. Can we get 50 cents in this one. I'm going to try this guy here. So 2015, maybe I'll do this instead. Can this give me a credit at all today? Puts my break even down to 69.05. Let me see if I get a 50-cent winner here. 15 cents credit. No. So if I wanted to go after like $1,000 profit trap, that would put my break even down to 6,900. Let me see if I can get a dollar credit out of this one today. So I don't feel forced to take a trade. I mean, if I do the typical daily profit play, I'd be looking at 90 by 95 and 15 by 10. Right now this trading for about 75, 80 cents. This one's not bad. However, if somehow the market catches a bid and we get to 7,000, I don't want this thing to have any risk. So I'd have to almost put a defense trade up here to catch the 7,000 handle. But according to the option chain right now, we shouldn't get there. Just a higher probability is we shouldn't get to 69.90 or 7,000 today. But just watching real-time price, I mean, we're going to bounce at 45.50, or we're going to hold here and then kind of flow for the day. The biggest gamble level is still at 69.80. So any type of pullback here does make that 69.80 a bit more attractive on the day. So whether it's just this little pause and we just melt up to 69.80, or we fall to 45 and then rally to 80, but we have like a plus minus 20 on the day. So we opened up at 60, 80 is gettable, 40 is gettable, but we should be staying greater than 69.40 and most likely less than 69.80 for the day. Okay, so I'm going to look at this trade trading for 70 cents right now. So lower deltas. See if I can just look at the put side first. If I just do two bull put spreads, 50 cents is like, I want $1 total. If I'm going to risk $900, I want $1 out of that. We'd have to fall a little bit more aggressively. If I just get this trade here, that's a 10 delta. Pair that with a trade for 70 cents right now. I don't think I'm going to get filled at $1. I want to. Let's try this. All right, let's see if I can get filled for $1 here. Okay, so pending order coming for daily profit play. That is a 15.10. Now, if I go, that's sell buy, I will start a broken wing here. See if that will get filled for $1 credit. Just give me a little bit more defense. And that's 95. I'll get this one for a broken wing as well. And see if that can get filled for $1 credit. Okay, so there's going to be some overlapping. I haven't had a trade filled yet, but here's what's coming in for daily profit play for the members. All right, DPP plan for today. I'm looking for a 10 delta DPP. That's going to be the 16th expiration. And then the 69.15 put for $1 credit. All right, plenty of typing here. And then a 6995. All right. So pending orders. Andrew says, when does the engineer recommendation come out? We don't do those daily, Andrew. They've already been in. They're in from early in the week, and we're just hanging on to them. As long as we see price above 69.35 on SPX or staying above 694, 693 on XSP, we've got full profit for those. Those aren't daily. If you want to learn daily, I mean, it can be a bonus to it, but that's not how I'm going to run the service. I'm doing weeklies and monthlies. I don't need to throw in, in or backwards rewards risk, and I don't need to have more traders that are, annoyed about pattern day trading. For now, everyone needs to know this. Like pattern day trading is going to go away. Probably by the end of this quarter, the SEC is going to rubber stamp the restriction where it goes away. So pattern day trading for margin accounts. Right now, you have to have over 25K. Otherwise, you're only allowed 3 trades a week as far as pattern day trading goes. So you open, close, you can do that 3 times in a week, and then you're restricted. So it's a huge restriction for a lot of retail traders because if you are flagged for pattern day trading and you violate that, sometimes it's like a 30-day pause, and sometimes it's up to 90 days, which is ridiculous. That's ridiculous. So anyway, just sources at Tasty Trade have been pretty confident that the SEC is going to lift the restriction that's coming from the CME, the CBOE, all these regulatory bodies and entities that look, if you're letting people play prediction markets and gamble every freaking day, and you can gamble on curling and ping pong and do these 10-way parlays out of the on your toilet. It's like, I think you can take a calculated bet in a stock and options environment. So hopefully that will be official by the end of the quarter. I think that's just the SEC. So from what I did here, and this is Scott Sheridan. So if you know Tom Sosnoff, Scott Sheridan from Tasty, they left Tasty. They started their own network now called Lucky Dog or One Lucky Dog. And anyway, they just talked about it the other day on their show. And Scott has left it in good hands with the team at Tasty. If it wasn't for the government shutdown, because this is like at the SEC level, the government shutdown would have possibly had this come to fruition sooner. But now it's likely going to be, end of the quarter. So, yeah, I agree with you. Should be about time. Okay. Andrew says, when do you get them posted? I mean, if you're doing the engineered options, we posted the trade Monday before the market opened. So it was like 8:48 on Monday morning, pre-market. Trades were in. We got filled on those Wednesday, and they're still running. Okay. All right. So I have a couple of orders here for daily profit play. None of them are looking great. Like the broken wing butterflies are my kind of defense trades at the highs and lows. The daily profit play, my standard one, is offering about 70 cents right now. I mean, if I wanted to settle for it, I can probably just take it. I don't think it's a bad trade. I think it's a good space. I mean, 15 by 10 is not a bad space. Could I take, 75, 80 cents? I mean, if I did 75 cents on or 70, 75 cents, I'd want to hold it for the day for as much profit as possible. Let me see if we can get this. I don't know. I'll settle for 70 cents, which I usually don't do. Usually I'm very strict and I'll just say, nope, give me $1 and then we don't get a fill. But if I get 75 cents maybe or 70 cents, I'll take the little extra risk and I'll just kind of let this one run for the day and see if we get a good profit. But I think if we drop to, 45, we might get this thing filled for $1. So I've got it pending at 70. I'm going to bump this to 80. I should just stick to my guns and be disciplined and say, look, just fills for $1. Those are a lot easier trades and a lot better trades. If we get filled for $1, we get a quick, 50, 60, $70 out of that. That's a much better trade. Also, if I get filled for $1, I can play a little bit more on the defense side. So I'm going to keep it at $1. Okay. Stay disciplined. Keep it at $1. All right. Daily Profit Play, Andrew, posted in Daily Profit Play Telegram. If you are a Daily Profit Play Telegram member, you'll have it. Engineered options. If I do anything with the trades, you'll have it. Services that I have that have their own private member Telegram. Daily Profit Play has its own member Telegram. Pinch Point has its own member Telegram. Engineered Options has its own member Telegram. Project Options Edge has its own member Telegram. So any trades, any updates, they'll get posted inside those member Telegrams. Okay, that's the the best like kind of real time. I take the trade, I update. Any like Project Options Edge, I did that update this morning. We are looking at here's Project Options Edge. So right here, all these trades are closing today for profit. And then I'm going to start rolling some calls today on Intel, Coca-Cola, Snap, Tesla. Those are going to be per account. So I have to go into each account and then get those to roll. So while I'm waiting for some daily profit play to hopefully fill this morning, that could be decent. Question is, where's price going to be today? Are we going to be, hanging out around this like 45 handle? Are we going to be, trying to find, we opened up at 60. That means we could get to 75.80 today. This is the open, right where my cursor is, right? So we opened here at 60. If we drop 20, that's 40. That's 40. So we test those that close from yesterday. But do we bounce back above it? This is a positive. As long as we stay above this yellow zone, that's positive gamma, which means you have people selling puts and selling calls. So you have stability in the market, and then you're trying to get price to stay somewhat contained so we don't have, runaway volatility to the upside. So positive gamma is the best environment for the steady drift to the upside. If we cross over this and we get into negative gamma, that's when people are selling calls aggressively, capping the upside, and then buying puts to let the market kind of go into free fall. So it's way more volatile in a negative gamma environment. 89.1%, Renee. What's our win rates here? Daily profit play, 89. I'll type this out. I think I have let history be your guide. Yeah, I did this earlier. Let's talk about, these are my services. So where they are in relative to win percentage and reward to risk, these are our win rates. 89.1% on daily profit play, over 500 winners. Waterfall income, 94.5%. Project options edge, 96.8%. Pinch point, over 84%. Double up, 59%. But this one is all about huge reward to risk. So tiny risk on double ups. We do a lot of butterfly spreads where we get 150 to 200+% winners. Last week we had one closed out for 1,000%. Newsbreakers, 71%. Engineered options, over 70%. So this kind of matrix of where prices are at, the only spot you can't make money as a trader is if you have low win percentage and backward reward to risk. So if I'm going to risk $400 to make $100 and I don't have a good win percentage, I'm not going to make money. Guess where all my services are? Not there. So whether it's high reward, low risk, and decent win percentage, like this is 58%, but it's the highest reward to risk that I have. Crash insurance is technically like way the heck over here. Like way over here, because it's like 20 to 1, 30 to 1, 40 to 1, but it's just I win like maybe 10% of those trades, 20% of those trades. So I just put it here. But everything else in like the 70s percent wise, 80%, 97%, 94%, 90%, 89%. But we get the job done. Cool. So those are some win rates on how we get the job done for the day and the week and the month and the year. Just keep trading. Okay. All right. Let's see where we can go from here. I would like to see if markets will bounce around that 40 handle today. Couple levels I'd watch if you want to look at some type of bounce today intraday. It's an OPEX cycle. There's going to be some good liquidity here. It'd be nice to see the market either bouncing off this positive negative gamma pivot, which is around 45, or do the math and you have a 69.40 to this gap here around 30. So I'd say between 69.40, 69.30, I'd actually like to see if the market can bounce and hold that for the low today. So if you like to get into the charts a little bit more aggressively, if we have a, let's say 35 by 30 bull put spread, If that can bounce and you can get like $1.50 out of that trade or even $2 out of that trade, that's a really good trade. Intraday, I know it's a little bit backwards on a 5 wide, but that's still a really good credit for a fairly high probability win because that would be beyond the market maker move, which typically we don't see the day do that. And you would have some support where if the market bounces here at the positive negative gamma pivot point or bounces off the measure move at 40 or fills the gap at 30 or 35, that would be a pretty strong case to look for a bounce. All right, are we getting filled at all? Where are we at? We're at 85 cents. So it's not there yet. Float this back up here. All right. So we're at 90 cents. I see it floating around like 80, 85, 90 cents. Not a bad trade. We're at 48 right now. We'd still be, 30 points clear on the put side. Okay, I'm going to keep it at $1. I'll keep it at $1. They worked on my thinkorswim. I wonder why. Not sure why. What are they working on? What are they doing? Are they? Can you log in your thinkorswim? My broken butterflies did not take. I mean, they're not filled. Right now, the broken wing here is offering about 25, 30 cents on the put side. This one, I mean, this isn't terrible. I would even be willing to take the broken wing butterfly for like 50 cents. But if I'm going to get the filled on the broken wing for 50 cents, then I certainly expect the daily profit to get filled for $1. All right, it's closer. I see it like flashing up to like 90 cents right now. Hoping we can get that pop to $1. Okay. Let's see the bottom of the gap. Yeah, so I've got this thing right here's the close around like 25. So that candle close is 69.26. So like I said, I mean, do the math. I mean, from 60 down 20 points, it puts you at 40. If we come in and gap fill this thing, that's around 25, 26. Hopefully price will find a way to, stay there for the day. This 69.45 is a pretty important level for today. If price can get back above it, or if we, fall for the morning and then come back in and settle here, like that's fine. I just want to see, are we interested in trying to find the largest gamma level today at 69.80? Maybe. I hope so. It's not like this is, it's like this is usually right. So hopefully the market cares enough to get a run to 69.80. We might have some. So we have today only, and then we go into Tuesday. Tuesday doesn't look so awesome. We're getting today like we are crossing over that 45 handle, so it's just slipping into slightly negative gamma. Going into Monday, or I'm sorry, Tuesday, we're starting to line back up around 69.25. So again, I'll make the executive decision on engineered options. Do we want to, hold this thing into Tuesday? We can obviously let it ride. I don't love doing that. I mean, the goal is like we want the market to be drifting higher, staying break even or better, and we have those levels mapped out. So basically, if the market isn't break even, then we have hopefully like a manageable trade. I just got filled for $1. So daily profit play is now filled for $1. So filled. Update in Telegram. DPP update. Okay, let me keep an eye on the VIX right now because I might want to make a quick adjustment. So VIX is 15.93. I mean, are we just absolutely going to dump today to the downside? This low would be, 75. That would be a shitty Friday, that's for sure. If we, drop from open at 60, drop down to fill this, that's a 1.22. We shouldn't get there. If the VIX is, 16, unless we're going to rip up to like 18 plus, we shouldn't really fall that far today. All right. So we are coming down towards the lows yesterday. That would be about the plus minus on the day. But what is gettable is notice how these gamma levels are starting to fill up a little bit. That 69.25, 69.20 is starting to be a little bit more attractive to price. Now, again, if it finds it, that's fine, but we want to see it find it and then bounce. So I'm either looking for price to bounce now around that measured move, right? Or that gap fill gamma bounce around like the 50% ATR. Obviously, I'd rather see price bounce. Okay. So if price ends up stalling here and going back up, our daily profit play for $1 will be trading for probably, 60 cents, 50 cents. We can take some profit out of that this morning if it bounces. So we'll see what it does. Okay. So let's go here. This is today's daily profit play. We have this one closing for full profit today. This one closing for full profit. Waterfall strategy 2. We're going to get some expirations today. How many of you are in my waterfall? So we have 2 winners closing today for profit. That should be an extra $150 on one contract. And then in 14 days at the end of the month, we have another one that's closing for 75 cents. End of the month, we have another one closing for 50 cents, another $125 for contracts. All right, there's my DPP. So for $1, see if we can get a little bit of a bounce. Let me see if this will hold. So 15 is our daily profit play. I've got defense below that. What's my break even on the defense trade? That'd be 6,900 would be my break even, plus a profit trap of 6,905. All right, I'm gonna hang on to that trade for now. I like that trade. That's risking 4 to make 1 with a $500 profit trap. The call side is probably not going to get filled if we're dropping a little bit unless we rally hard this morning. So this could be a pretty quick win on daily profit play if we are down for the morning and then right back up where we started. Guess what? That dollar is probably going to trade for like 30 cents. So we can take the profit and not worry about the rest of the day. Or if you like it, then you can just hang on to it as long as you want. But hopefully the goal is to grab a full dollar today. I'd like to kind of grab $1 out of it, or at the very least, try to go for like a 20-cent debit and grab 80 cents out of that dollar. That's always a good win for me. Okay, Larry said bear call spread 69.90, 7,000, buck 15 out at 30. Excellent. Good grab there this morning, Larry. Okay, very good. All right. Okay, Melinda. We'll see you soon. Thanks. All right, VIX. Yep, VIX is spiking a little bit. I'm going to set a chart alarm. Let's go like a 16.5 VIX. 16.5 VIX, and then the other one's up here towards, I'll go 17.5. Just to see if we are going up in VIX, then I would expect price to continue to fall a little bit. So as long as we're not going too high on the VIX, that should be, containing our price for the day. What we want to see happen for daily profit play is, prices started down. We come back to find the gap. We're sitting around that positive negative gamma. I'd like to see price get back up towards the opening price around 60 to 65. If it does that, our daily profit play should be looking pretty good for profit. Right now it's, let me see if I can, right now it's already up $20, $25. So great. If this is getting down to, I'm actually going to put a take profit in here at 20. Okay, so I'll try to take 80 cents out of that dollar. Let that marinate. Okay, so setting a closing order for 20 cents debit. Yep, so it should be pretty decent. Yeah, this is looking better. So it comes right down, bounces off that positive negative gamma. Let's see if we can get back to the open. Flows for the day still. This is real time gamma. This still looks decent to try to get to 69.80. So if we get the dip by the dip, take this right up to 70. This is roughly around 74. Strike price that looks magnetic would be like the 70 to 80. Hopefully we'll see that continue to pop up here and be like the largest game of the day. Okay. So keep an eye on that one this morning. While we are here, after we wrap up this session, we'll have a small break, and then I'm coming back for engineered options. We have a 12:30 masterclass today. Blake, we'll get a recording up and running here in a few minutes. What I'd like to do, really quickly, while I have everybody, is we had a fun class yesterday. I've already started taking some notes here. Here are the notes from yesterday. Okay, so engineered options. We're going to continue to power through these notes today, and once we have today's session recorded, in the books, then I will take these notes and share them. We'll also have another class on Monday. I'll just keep adding to the notes. Okay. So the goal is let's have another good class today because I just felt like we kind of ran out of time. We got the core concept out there. I wanted to make sure we had 300 plus people in the classroom yesterday, and I got a lot of crystal clear that it's all making sense and what we're trying to do and figure out how we're engineering our trades every single week. And also wanted to get the monthly trades out today as well. We got some important levels to talk about. So I'll have some bonus trades today in engineered options. So if you would like to get into class today, if you'd like to get into engineered options, which couple things, the engineered options class, weekly and monthly income trades, be a lot of fun. It truly is like kind of a set and forget it. I don't want to micromanage these trades. I can set them up pre-market Monday. I give them the week to fill. I manage the trade on Friday or on the following week expiration, which is going to be Monday. So the goal is if I take the trade, if I set it on Monday, it is good until the next Monday. So if we are filled on this trade, then by Friday, we will take a look and see, is it worth taking profit now? I'm not that interested in taking profit with a tiny little gain. I'm interested in if I have, 80% or 90% of my max profit, then yes, I'll take the profit. Okay. But if it's not there, then I'll let it run over into Monday, and hopefully we will see that thing expire for full profit or, again, 80 to 90% profit. So we can always step in and manage profit, but I'm not interested in, taking a winner for like 50%, taking a winner for 20. I don't care. I want the whole point of this service is I want like 1-to-1, right? So that way, all we really have to do is win, 55% of our trades, and we will make money. The nice thing is we're winning about 70 to 74% of our trades. So I do expect to have a pretty high win rate as far as 1-to-1 risk reward, especially. That's very favorable environment to have 1-to-1 and have a 65 to 75% win rate. And as far as maintenance wise, we set the trade up early in the week, it gets filled, and then we just let it hang out for the week, and we get profit. Okay. So if you'd like to get into engineered options, we'll have a masterclass today at 12:30. Engineered options also comes with my practical options foundation course. That's a $500 bonus course. And I'll also, you have it here. I'm sharing this with everybody, but if you like just kind of some bonus education, a one trade mastery. Okay. But class today at 12:30. Nice, David. Let's see here. You mentioned you wanted to stack. Yeah. So if you saw the trades, Randy, I had 3 levels that I was trading this week. We've been filled on the first trade. The other ones haven't filled. So it's essentially, if you remember when I was kind of teasing this in December, you remember how I was calling out, income grid. That's what I thought I was going to call it. The team ran with engineered options just because this is, kind of a creative way of structuring my trades. So they like engineered options. But when I explained in class yesterday, I think this is more of like an income grid or like income leveling, which is this is where I think I need to participate around the market. And this is where I have some defense. And the reason I want some defense is because every single week, if the market's not perfect, and it doesn't have to be perfect, but if the market isn't break even or better, I'd still like to break even or better for the week. So if the market's down, I still want to break even. If the market's up, I want to win, obviously. Make sense? So, yeah, but I typically have 1 to 3 levels that I'm looking to participate in. And so taking those 1 to 3 levels, that's all about risk management. Okay. All right. So we'll have the link up. Blake, we can pop that in, and let's start in like let's go 9 minutes. Let's go 9 minutes. Let's start that session 9 minutes. I got a bunch of. Give me 1 second here. All right. Let's see here. One Trade Mastery. Yep, there's the video for One Trade Mastery. Mark, you're good on that? Okay, cool. We're good there. Sorry, everyone's realizing that I just posted I'm doing the master class. Let's see. So we did a Thursday, 2 p.m. Friday, 12:30 p.m. and Monday, 11 a.m. All right. Just coming at it from all directions today. Okay. Anyway, I'll come back to that in a sec. What I wanted to look at here really quickly. So we've got daily profit late in, and so far looking better. We got filled. Daily profit play is up $40 right now. Cool. Waterfall income. Let me find these trades. Waterfall income. So our Jan 16 expiration trade should be looking good for full profit. So how many of you closed out? How many of you waterfall income closed out the trades early? Mark, did you need some buying power? Sean, did you need some buying power on those? Let's go 116. So trade number 129 should be worth a full 50 to 55 cents. That is actually, we canceled that trade because that was above 6,000. Yep, we canceled that one. Okay. What's next? We have the one for $1. That's filled. That was trade number 127. That's all the way down to 5,800. So this one's worth $1. That's awesome. That's going to be a full profit. So we're going to exit this one today for $1. Profit's going to be $1 there. Nice little winner. Nice little winner. Full profit close. That's trade number 127. I'm going to get this updated. All right. You're still in today. Okay, good. So trade number 127. I'm going to get this out to the team. This will be good for waterfall income trade management. We have several trades expiring, or we have trades expiring. I don't know if it's several. I think we have 2 or 3. We have 3 trades expiring today for full profit. Trade 127 SPX for $1 credit. Okay, so that one is closing for $1 credit. Filled. Okay. Next one should be 122. That's down to 59.60. So this one should be trade number 122. Trade 122 SPX for 50 cents credit. Trade number 115. I'm sorry, 116 SPX for 75 cents credit. That should be the 3 trades that'll all be hitting profits. That's not right. That one already closed. All right. It's probably easier if I just find them this way. So I need to find a trade number 127 and 122 are for $1 and for 50 cents. That one is good. Next trade, 57.75. Okay, 127, we're good on that one. This one, 59.60. Trade number 122, got it. And this one, aha, okay. So we have 2 waterfalls for today, and then we have the other ones on January 30th. Let me find those. I want to find those really quickly. So these will expire for full profit. And then 130 expiration. Let me find those. So this one, the 56.80. That's trade number 117. SPX for 75 cents credit. And this one for 5,900. Trade number 128. For, so that's another 5,900, 5,990, 6,000. All right, let's trade number one for 50 cents. These will expire for full profit. All right, so that gives us 4 trades expiring for full profit here in the next couple of weeks. 2 of them closing today, 2 of them closing at the end of the month. We have this February one that's out to 58.10. There's still a 99.5% chance of profit. That's worth 75 cents. We'll let that one sit for 30 days. And we have some pending orders in waterfall income looking to get filled on. Daily profit still up about 30 cents right now. All right. Yesterday for Project Options Edge, I did post. This is a ratio spread that I took. I'm going to combine these. So this is a ratio combo, Project Options Edge. I put that trade in for $3.10. That should be a new trade from Project Options Edge. PGR, DE. All right. This is going to be a new trade. New trade for IBIT. 115 expiration. $32. 310 credit. Filled. At the 35 strike and 30 strike, if price gets there, which is right now pretty unlikely. Probability of profit on these trades around 83%. Unlikely. If IBIT price is less than 35 and less than 30, my break even on 200 shares is going to be 20. That's going to be like $28. Where did I put that trade? 28.95 is going to be my break even. 28.90 to 95 based on that 310 fill. Most likely, if Bitcoin rallies to new highs in 2026, this is a straightforward income play. Okay, so new trade filled there. All right. As always, a lot of moving parts. I've got some covered calls to attend to this morning. Catherine just let it close and need to pay commission fees for what? If you're still in those waterfall income trades, I would let them just expire today. And the fee stuff depends on your broker. I mean, for me, I pay entry only, so I don't have an exit commission. So I've already paid my commission, 60 cents a contract, and I can either close it today for no fee, I can let it expire today, but if it's an SPX trade, you can't close it for zero, right? You can close it for 0.05. It's going to be the same if you let it expire. I think they charge you like some type of like CBOE processing fee for like $4 or something. So either way, it's like they're going to get their cost or commission or fees on it, but we're still going to hit full profit on those for $1.50. And then for the ones at the end of the month, that's another $1.25 on waterfall income. Doris, that IBIT trade is for Project Options Edge. So again, if you have engineered options, there are some specials running around right now. Engineered options will get you my practical options bonus course. There's also an engineered options bundle with my Project Options Edge. If you'd like to contact our team about that, you can contact our team, support@prosperitybub.com, or give us a call, or obviously just give us a call and inquire. Ask about Project Options Edge. Okay, that's a discretionary trade service. Last year, I mean, I've got the tracker here, Project Options Edge. I'm going to post that new trade. So we have some running positions. Here's DE, PGR. Here's number 89, IBIT. I put this in today. IBIT 115. Buying the 37. Selling the 35. Buying the 32. Selling the 30. 310 credit. Filled. So now it's in the tracker. So going back to Project Options Edge, there's a variety of strategies here. So, I'd like you to be a little bit more familiar with, okay, what are we doing? We're taking a diagonal spread, a condor, a 1-1-1. We're using some naked puts. We're using ratio spreads. It's a little bit more capital intensive, but it's super high probability income trades. So we had 63 trades logged last year. Actually, we've had more than that. We're on like trade number 89, but I obviously still have open positions, right? I'm still running with some of these trades that look good into this first quarter. And then the rest of the trades that we've had closed and done, 61 winners out of 63 trades. This one loss was on a failed condor, and it wasn't in gold, it was in ES, so futures. I thought it was a pretty good trade because we had the spike up to the, like, VIX was 22 or 23. I put on an IR condor. It was only 5 or 10 wide. I took a loss on it for like $700. I closed out a Spotify trade for like minus $700 or $800 when my max risk was like 2,000. So managed losses, no big deal, but good income trading overall, high probability stuff. So if you're kind of ready for more than just a call, more than just a spread, you want to it's portfolio management. Like, this is how I trade a lot of my client accounts. Okay, for high probability income. The nice thing about trading with options is, look, this is a stock market. You own equities, right? So when I do something like Project Options Edge and individual stocks, I take these trades a lot of times with the intention of, if I were to get assigned, I will own the shares. And once I own the shares, I can still trade options around those shares to lower my cost basis, to flip that for income. Okay. So, this is just a cool example, but this is one of the most eye-opening ways that when I was running a trading room for the last, 6, 7, 8 years, Coinbase at the time, trying to think when this would have been. This would have been here. This would have been like 2021, 2022, when the market was, you get some major risk off and deleveraging. I put on a trade here where it was like I want to say it was either this level. I'm pretty sure I did like the 155 by 150. I'm almost positive. I think I did. Catherine, you might have been with me at the time. Donnie might have been with me at the time. I don't remember the exact trade, but we did like a 155 sell put and a 150 buy put. And it was probably a trade that was, 250 to 270 credit, something like that. And we started the trade right in here. It was a while back. Yeah, it was like 3-4 years ago. But when this trade was executed, the goal was, okay, we just breached this support. I was looking to see, could I get Coinbase to go back up? What did Coinbase do? It went all the way down. Okay. Now, you might look at this and say, well, the price dropped. I mean, from a 155 and price drops down to, $45. Most people are going to see that and say, oh my gosh, how much money did you lose, Chris? Well, it's a defined risk trade. So that really would be the most I would risk. If I got a $5 wide, I'd be risking 250 to make 250, right? So it's not that I was risking a lot of money on the trade. It was like, what I decided to do was, because our window was, we saw this trade go all the way down to $50 and $45. What I decided to do was, I took the put off and I took profit on that put, and I was assigned the shares at 155. So the broker assigns me 100 shares at 155, but I took my 150 put all the way down to like $52. Okay. So that 150 all the way down to 52, it's like we nearly made $100 on that put, which means my cost basis was around like 54. I went in and sold a $55 call for like, I don't know, close to like $8 or something ridiculous like that. So that lowers our cost basis to 47. We get it called away at 55. And then I rolled it a couple of times and my cost basis was down to like 36 bucks and I let it get called away at 55. And we flip like a terrible position into a win of almost $2,000. Right? So it's either, yeah, I can take the defined risk trade and just, I lost 250 bucks, no big deal. We'll go find another trade. That's great. That's an easy way to do it. Never worry about your trade. But when the broker assigns us, we still have to either manage that trade and get out of it for that same risk, which is pretty simple to do. But because of the breakdown, I decided to take some ownership. And, did I get lucky? Sure. Like, let's say Coinbase went to zero. Well, I'd be screwed. But it didn't go to zero and it flipped all the way back up here to like $100. And I had some traders that with me that lowered the cost basis to like $25 and let it go at $80 and made like 5 or 6,000 bucks on the trade. So you go from, a loss of 250 bucks into a backup plan that you can still make money on. And I mean, would you rather lose $250 or make $2,000? Would you rather lose $250 or make, $5,000? Like there's backup plans when it comes to trading options, which is why it's some of my favorite stuff to trade. Okay. So that's what's nice. And so Project Options Edge is kind of in that same spirit, which is if I'm going to take some of these trades, I don't mind owning some of the shares. I don't want to. I'd prefer not to. But if I do, I can repair them. And rather than taking that loss, I typically can repair them for, a few $100 profit. Typically, when I'm going to take some ownership of something and repair it, I'd like to kind of flip that for like 500 to 1,000 bucks. And if that happened to me, 5 or 10 times over the year, and I can average 1,000 bucks on those winners, like that's good income, right? And I don't have to take these crazy expensive stocks. I mean, if I owned Google, it's like I have a trade running on Project Options Edge on Google for like $150 strikes. We're trading at $330. You know, so point is, this is about as advanced as I'm going to make trading, and it's still just one step at a time. So when you're ready for more than just like one trade a week and you're looking at more portfolio management stuff, maybe Project Options Edge is something for you. Okay. Peter, so I don't have a link for it. I know that we have a classroom for it now. The best way to get in Project Options Edge is to contact the team. So you can either give us a call, email support@prosperitypub.com asking for Project Options Edge, and they'll get you set up. And, I know right now, like they're doing a special bundle with engineered options, so you can inquire about that. But just as a standalone, this was one step shy of like an all access Diamond Club membership. I think they're changing it a little bit to bundle it with some other services, but give the team a call. I don't have like a sales webinar about Project Options Edge. It's been strictly a discretionary, like word of mouth service. But obviously it's starting to get some attraction or get some attention because, winning 97% of your trades feels pretty good. Having an extra $2,500 to kick off this year feels pretty good. Right. So it works. And this is how I manage a lot of my accounts. Cool. So, yep, just let us know. All right, let me do this. Blake, let's fire up engineered options. So daily profit play is still running. Okay. The market's down just a little bit. I'm gonna have to peel myself off here. I want to do some rolled covered calls. I've got to get Intel, Tesla, SPY, Qs, Coca-Cola, Nvidia, Snap, and Apple. I need to do some rolls here. And rather than taking up more time, let's get engineered options ready to go. We have class today at 12:30 p.m. Eastern time. So we'll have masterclass number 2, and we'll talk more through our core strategy, take some more notes. We'll get those sessions posted with the notes. And hopefully I'll see you today in class at 12:30. So Blake, go ahead and take the screen here. Engineered options at 12:30 today. It's prosperitypub.com/EGO. Email our team if you have any questions, support@prosperitypub.com, or call us. You can ask for engineered options. If you want to ask about Project Options Edge or any of the services that I have here, please reach out and ask. Okay. And then my email, I have it right here as well. My email for all members. This is the one that I check the most. I'm actually trying to locate my work email right now. ChrisPulverPub@gmail.com. That's the easiest one for me to answer. Okay. There's like, finmc.com. There's I don't even check those. I don't like Outlook. I'd rather have Gmail. So anyway, this is the best way to get a hold of me. You can be here every day with me and ask me questions live. But if you want to reach me, after market hours, ChrisPulverPub@gmail.com. Cool. All right. And we are watching price just kind of fall to the wayside a little bit today. That is super annoying. Let's watch these levels here. I mentioned the significance of that like 2025 zone. If we fill the gap, we'd like to see price obviously bounce back up and kind of settle in. So, all right, off we go. Let's figure it out. Okay, I'll see you in class today, 12:30 p.m. Engineered options. Let's go. Thanks, Blake. Let's see. Let's make sure I'll hang out till Blake takes the screen. And if I know he's in the chat. Double up alerts, good. Thanks, Blake. I didn't. Yeah, that was Deanna's mistake. Give me 1 second. Project options, edge, engineered options, delete. Okay. Okay, we're good, dude. All right, Blake's gonna take the screen. We're gonna run a session here for engineered options. Masterclass today, round 2, bonus class, 12:30 p.m. I will see you then. Okay. Thanks, Blake.
Yes, sir. Oh, here. Don't leave the room yet. There we go. Had to claim host back.
Okay. You got it, man.
Yep, I got it.
All right, keep an eye on that daily profit play alerts. Keep an eye on Telegram from me. Daily profit play alerts. I'm still watching the trade engineered options. We got class today. Keep an eye on the Telegram, and I'll see you in class. And I'll be here answering questions as well. I'll hang out. I want to get some of those cover calls taken care of so I can check that off the to-do list today since today is expiration. So, all right, man. Thanks.
Cool. You got it.
I'm going to show you how to get the money doubling returns every 7 days. That's what we're going to be targeting today. Now, I realize it sounds like a very bold claim, and it shouldn't be taken lightly. But we're about to show you how this might change the way you approach trading forever. You see, over the last 60 days, my team has been field testing a radically new type of option. One that's been engineered to double our money, even when the market moves by a fraction of a percent. In fact, get this, as long as the market climbs by at least 1/10 of a percent, we should see a full 100% payout. For instance, let's jump back to the beginning of June. You can see that particular week, the market barely moved higher, kind of did nothing. In fact, according to our data, it gained a measly 0.47% between June 9th and June 16th. Now, for anyone using a traditional strategy, that would have been worth next to nothing. However, anyone using the engineered option could have flipped this teeny tiny market move into a full 100% profit. Every $1,000 would have turned automatically into $2,000, and every 2,500 would have turned into $5,000. Now, if your PS radar is going off, I don't blame you. No, a traditional option strategy wouldn't even produce, let alone on a 0.47% move, let alone have the chance to double our money. But like I said, this new type of option is very unique. It's been structurally engineered to convert teeny tiny market moves into money doubling opportunity, and that's why it's called engineered options. That's why we call them this, and man, the results have been phenomenal. For example, let's jump back to the next week. According to the data, the market gained just 0.35% between June 16th and June 23rd. For the whole week, a 0.35% move. Not much. That's 1/3%. I mean, the market can do that in 5, 10 minutes. And anyone using a traditional option strategy certainly took a loss. However, anyone using the engineered option wouldn't have lost at all. In fact, they would have turned this worthless market move into a full 100% profit. Look at it right there. Once again, every 2,500 bucks would have automatically turned into $5,000 in just 7 days later. You see, most option strategies require the market to jump by at least 5% in order to double our money, but not with the engineered option. That's simply not the case. Its superpower is converting even the smallest market moves into 100% returns. In most cases, it doesn't matter if the market moves by a millimeter or a mile. Each scenario offers the chance to target a money doubling return. For example, let's jump to the last week of June. Again, according to our research, the market gained 0.5% over a 7 day span. Kind of sounds familiar, doesn't it? For someone like me, 0.5% gain is usually meaningless in the market. But for someone using the engineered option, it was not meaningless at all. In fact, it would have doubled our money for the third time in a row. Technically speaking, that should be impossible. Over those 3 weeks, the market moved a total of 1.41%. 3 weeks. That's it. Yet, thanks to engineered options, we could have doubled our money 3 separate occasions. 3 weeks, 3 times, we could double our money. Anyone who entered the trade with just 2,500 bucks would have walked away with an extra 7,500 bucks in their pocket. That's what I love. Let's say you doubled your starting stake. We're looking at an additional $15,000. Now, let me assure you, this is not some silly marketing trick. Today's guest, a former hedge fund trader, has uncovered the secret behind these unique option trades. In fact, over the last 5 years, he's identified 200 historic examples of these engineered options in action, each one with the power to double our money with an accuracy, get this, of 70 to 80%. Now, obviously, we're not going to cover 5 years worth of trade data today, but I will say this. In 2025, these special options would have doubled our money 31 times with a 77.5% accuracy. It does not get much better than that. To put in perspective, let's say you took each trade 2,500 bucks, you would have ended the year with $55,000. This is why I'm so excited to be here. Now, obviously, that's an exceptional year. It wasn't a fluke. In 2024, these options would have posted 34 total winners worth a net profit of $47,500. 2023, 30 total winners with a net profit of $52,500. Or in 2020, when it felt like the whole world was melting down, 32 money doubling winners for a total profit of $45,000. And ultimately, that is why I'm here today. And I'm so pumped. With 2026 just underway, I believe these engineered options could have another banner year. In fact, thanks to a brand new wave of Fed stimulus, I think 2026 will be even better. It's why our team has spent the last 60 days helping our guests prepare. For today's session, we audited all 237 unique trade examples. We manually tested each entry, each exit using real price data, and we even helped optimize the strategy where the wins should outpace the losses by stunning 3-to-1. You see that right there on the graph. In return, he's promised to show us how to leverage these unique options on a weekly basis. In fact, he's even promised to share a new trade with us tomorrow morning. If we decide to trade one contract, it could be worth $250 in profit. Maybe we do 10, that's $2,500 in profit. You do 20 lot, that's $5,000 in profit. Whew. So if that perks up your ears, welcome to a special session we call Engineered Options. I love this. Oh, I'm Lance Ippolito. If you don't know, I've been a trader for almost 2 decades. I've been featured on CNN Money, Cheddar TV, Market B, and I've been fortunate to speak at the Money Show a couple times too. I developed two of the most popular trading indicators used today, and over the last few years, I've produced our firm's most successful strategies, which I'm very proud of. And given my history, I'll be honest, I'm not usually interested in alternative trading methods. However, these engineered options actually caught my attention. They have the exact makeup of an option strategy I would use myself. Large upside, short hold time, one-to-one risks, cheap entries, quick execution, and automatic exits. And most importantly, the chance to double our money on a weekly basis, even when the market moves by a fraction of a percent. Now, the man behind these engineered options is Chris Pulver. He's quite possibly one of the most innovative option traders on the planet. In the last year, he used his strategies to generate more than $500,000 in trading profits. You see, Chris is not your run-of-the-mill internet trader out there. No, he's actively trading a $5.2 million book on behalf of family and friends. Sadly, he cannot take on any new clients at this time, but he is kind enough to share his best strategies with folks like us. In fact, his flagship strategy has generated over 500 winning trades with an average daily return of 15%. It's why more than 150,000 people all around the world tune in and follow his work on a regular basis. Many of his top students have produced returns well into the 5 and 6 figure range, like Lynn, who turned $4,000 into $19,000 in just 90 days. David, who banked an additional $30,000 in 6 months. And Larry, who made over $155,000 in just 1 year. And as great as that is, it could pale into comparison to what he'll show with us today. Ooh, I'm pumped. You see, he's going to show us exactly how these engineered options convert into even the smallest market moves into money doubling opportunities. You see, unlike most option strategies that actually penalize us for a small market move, this one doesn't. In fact, it rewards us even if the market moves by a fraction of a percent. In most cases, as long as the market climbs by at least 1/10 of a percent, we should see a full 100% profit. In fact, this might be the biggest advancement I've seen in option trading in the past 5 years. Ultimately, that's why our team has been supporting Chris over these last 60 days. We believe these engineered options could help us see our best year on record. And best of all, his next live issued trade alert goes out tomorrow morning right at 9 a.m. So if you'd like to follow along, you'll just need a trading account and a few minutes to set up the trade. So Chris, why don't you show us exactly how these engineered options work?
All right, absolutely, Lance. And I have been waiting a long time for this. It is quite possibly the biggest breakthrough of my 26-year career. But before we dive in, I'd like to remind everyone that no strategy is 100% perfect. The results that we've seen in both our backtest and live trading have been pretty encouraging. I'd say incredibly encouraging. Now, just last year, the engineered option would have posted a $55,000 profit, assuming we started with just a $2,500 per trade position. Now, obviously, that includes all 31 winning trades, but don't forget that includes 9 losing trades. So granted, the wins greatly outpace the losses, but we never know when a loss might strike. So if you decide to trade with us this week, please be responsible. Don't over leverage. Despite what the data shows, the engineered option was never designed to be a get rich quick type of trade. They were designed, however, to help put the odds back in our favor and back in the favor of the trader. You see, this unique option is not about working harder, but it's certainly about working smarter. And in particular, flipping normal weekly price action into real tangible returns, which is something that most option strategies simply can't do. But that's why the engineered option is such a major discovery. It can convert the most meaningless market moves into what could be a highly profitable scenario. As long as the market climbs by at least 1/10 of a percent, we should see a full 100% payout. For example, let's jump back to the month of July. Now, if you don't remember, the broader market wasn't exactly in great shape. Many of the major market players had just missed earnings expectations. Fears of recession were starting to rise again. And the institutions had just pulled over $360 billion out of the market. Now, in this case, the market didn't totally crumble, but it did stagnate. And for most folks, that was almost no opportunity to turn a profit. But for the engineered option, it would have been a completely different story. For example, from July 1st to July 7th, the market climbed a measly 0.59%. Anyone using a traditional option strategy would have most likely not seen any profit. Okay, but for anyone using the engineered option, we could have flipped this tiny market move into a full 100% profit. And that's no different than watching every $2,500 instantly turn into $5,000. Now, that's what makes the unique options so special. We're not penalized if the market barely moves higher. Even the slightest gain would be enough to double our money. For example, let's jump into the next week. According to our research, the market climbed 0.1% from July 7th to July 14th. That's a gain of 0.1%. Now, generally speaking, it's nearly impossible to produce a positive return on such a small directional move. But with the engineered option, it's not impossible at all. In fact, it would have been just enough to double our money for the second week in a row. And once again, every $2,500 would have automatically turned into $5,000 just 7 days later. And how about the next week? A very similar story. In this case, the market climbed by 0.81%. Now, for someone like Lance using a traditional option, that's generally not a big enough move to post a reasonable profit. But for somebody like me using the engineered option, that would have doubled our money for a third consecutive week. Just $2,500 into each one would have been worth a total profit on these 3 trades of $7,500. And here's what's crazy. We don't need to bend over backwards to accomplish something like that. You see, these options are very low maintenance. Once the position is set, there's nothing left to do. We don't have to babysit the option. We don't need to time our exit, and we don't need to close the trade manually. As long as the market climbs by at least 0.1% over the next week, we should automatically collect a full 100% profit. It doesn't matter if we decide to invest $250, $500, or $2,500. It should double by the very next Monday morning.
Now, Chris, I'm still shocked on how well this works. As you know, I was very skeptical at the start of this. You see, I've spent 20 years chasing big time market moves, and most of the time we need the underlying to jump by at least 5% in hopes to double our money. And even then, it's still not guaranteed. But with your option, the market can move as little as 0.1% and still produce a 100% payout. Can you explain to everyone here today, how is this even possible?
Yeah, absolutely, Lance. And you see, over the last 5 years, option trading has absolutely exploded in popularity. Everyone believes that using an option is the best way to amplify directional returns. But unfortunately, it's really not that simple. You see, the standard call option only shines if the market makes big, fast, huge directional moves. However, most of us know that it's not super common on a week-to-week basis. In fact, much like you've seen today, the average weekly move is less than 1%. So for anyone using a standard option, that's typically a huge problem. So the standard option was never designed to profit in a 1% atmosphere. So generally speaking, the market is required to move 3, 4, even 5+% in order to see a positive return. And if it doesn't, the option tends to lose value at a very aggressive rate. For example, let's look back at the week of January 21st. Over the 7-day period, the market climbed 0.89%. So nearly 1% gain. But in theory, a standard call option in a rising market, it should produce a reasonable profit. However, that's rarely the case, because in this instance, the standard option lost 95% of its value despite the market actually finishing the week slightly higher. And this is due to something called time decay. And with a standard option, time decay is constantly working against us. And each day that passes, our option tends to lose value, even if the market is moving towards our desired direction. It's why we can accurately predict where the market is heading and still lose on our trade, which is really frustrating. And I think most of us have probably experienced the harsh reality of time decay at one point or another. And it's heartbreaking. In fact, it's the primary reason that some 90+% of all options will expire worthless. However, what makes our options so effective is it's been structurally engineered to remove time decay from the equation. And really, that's the secret to their success. Without time decay working against us, we now convert even the smallest market moves into money doubling opportunities. And so, for instance, we jump back to that week of January 21st. Let's look at a trade example again. As mentioned, the market climbed 0.89% over the week. Now, with time decay working against us, the standard option would have lost over 95% of its value. But without the time decay, the engineered option would have posted a perfect 100% return on investment on the exact same market move. And that's ultimately what makes the engineered option such a powerful weapon. Without time decay destroying our options, even the most insignificant market gains can offer a highly profitable outcome. And as you can imagine, this is a massive advantage. We're no longer reliant on strong directional rallies. We don't need the perfect breakout. We don't even need a crazy bullish move. As long as the market moves slightly in our favor, we'll be positioned to collect a full 100% payout. For example, look what happened the very next week. Between January 27th and February 3rd, the market gained 0.43%. Now, again, with time decay working against us, the standard option would have expired completely worthless. But without time decay, the engineered option would have doubled our money for the second week in a row. Anyone who entered each trade with just $2,500 would have walked away with an extra $5,000 in their pocket. Now, that is incredible considering the market never moved by more than 1%. And it's why I use different variations of the engineered option when trading the money for my friends and family with over $5 million. Now, these allow me to more effectively scale the returns while minimizing the likelihood of a loss.
Chris, this really is quite revolutionary. It's ultimately what drew me to your options to begin with. You see, most of my strategies target money doubling returns. However, because of time decay, we do not always get there. But with the engineered options, it seems much more common. In fact, I noticed several months where they would have doubled our money 4 or 5 times in a row. For example, in May, they would have posted 4 consecutive winners for a net profit of $10,000. In June, 5 more money doubling winners for a total of $12,500. And in September, 5 more for a total of $12,500. For most folks, that's a dream come true. It's money that could be used towards a number of things. Look at that. Beautiful Greece, trip to Europe, maybe that new truck out there. Love that on the beach. Bathroom remodel, or even boost that retirement account.
Now, Lance, to be fair, these were 3 of the best performing months in 2025. Now, obviously, those results are really, really attractive. Now, I can't think of one person out there who would be disappointed with a 5-figure month in gains. But keep in mind, not every month would have been absolutely perfect, right? Losses are a part of the game too. But here's what's cool. We don't need to be perfect in order to be profitable. For example, in January, we would have gone 3 of 4 with a net profit of $5,000. Okay, for February, we went 2 for 3 for an extra $2,500. In July, 4 for 5 for an extra $7,500. And in October, 3 for 4 with a net profit of $5,000. So obviously those months weren't perfect, but the wins would have outweighed the losses by a mile. And like I mentioned, we would have seen 9 losses in 2025, but that would not have stopped us from seeing $55,000 in profit based on that starting stake at $2,500. Now, based on the recent $74 billion Fed stimulus, I think that 2026 will be even better. So over the last 26 years, I've traded almost every market asset imaginable. Crypto, Forex, stocks, bonds, gold, silver, and basically everything else. But as far as I'm concerned, the engineered option is the only asset that gives us a realistic shot to double our money each and every week.
Now, Chris, I wouldn't even have believed you, let's say 60 days ago, but after spending the last few weeks understanding how it all works, I'm quite impressed. But I do have to ask this. How do you know when to set up the trade and if the market will move higher over the next week?
Well, Lance, nobody knows with perfect 100% certainty what the market's going to do, but we do have a pretty good idea from a week-to-week basis. You see, the market has what researchers have called a natural bullish bias. And in other words, the market tends to have more winning weeks than it does losing weeks. In fact, since 1993, the market has closed higher on a weekly time frame 58% of the time. Now, in recent years, this bias has continued to strengthen. Since 2020, the market has closed higher 60% of the time week to week. And since 2023, it's closed higher 62% of the time. Now, to put that in perspective, if you simply opened a trade each Monday and sold the following Monday, you would have won 62% of all of your trades. Now, obviously, that's a really, really strong baseline, especially considering there are no additional conditions. However, we found 2 technical confirmations that increase the win percentage quite dramatically. And for instance, when the market opens above a 144 period exponential moving average, it closed higher almost 70% of the time. And that's pretty good, right? That could give us, that should increase our chances from going from a likely win to a probable win. But according to our research, it gets even better. You see, when the market opens above 144 period and a 50 period exponential moving average, the win rate spiked as high as 77%. Now, this varies a little bit from year to year, but that's ultimately where our strategy begins. You see, we're not blindly applying these options trades each and every week. We first confirm that the market is trading above both the 144 and the 50 period moving averages. And if both confirmations are in place, we know the market has closed higher roughly 77% of the time. For example, look at the week of September 8th. Here is the 144 EMA, and here is the 50 EMA. Now, here's where the market opens. And in this case, the market was going to close higher roughly 77% of the time. That's our probability. And sure enough, that's exactly what happened. The market closed with a 1.8% gain. And for anyone using the engineered option, that was good enough for a perfect 100% return. Now, once again, every $2,500 would have instantly become $5,000 just 1 week later. And that's the real beauty behind the engineered option strategy. You see, we're not trying to time the market. We're not looking for the next breakout. And we're not digging for chart patterns. Okay, that's traditionally what rookies are doing. We are simply using a few additional conditions to leverage the market's natural bullish bias. And as long as it opens above both the exponential moving averages, it's known to close higher about 77% of the time with historical accuracy. For example, take a look at the next week. Once again, you'll notice that the market opens above the 144 and the 50 period EMAs. And as expected, the market drifted higher over the next 7 days. In this case, the market closed again with a positive week of 1.3%. And for anyone using a normal option, that may not be worth much. In fact, it might end up being a loser. But for our engineered option, it would have been good enough to double our money for the second week in a row. And once again, every $2,500 would have become $5,000.
Now, Chris, let me make sure I understand. You're saying the market has a natural tendency to finish higher from week to week. Over the last 3 years, that's happened 62% of the time, but that number spikes as high as 77% if the market opens above both the 144 and the 50 EMA.
That is exactly right, Lance. And you see, when the market opens above both the exponential moving averages, it triggers a buying response from most institutions. Generally speaking, the algorithms and quants spend the week in buying mode, which keeps the markets grinding higher. And it's why these trades often win for several weeks in a row. For example, let's jump to that next week. Once again, the market opened above both EMAs. And in this case, the algorithms were likely flipping into buy mode. And as expected, the market moved slightly higher over the next 7 days. Now, in fact, it climbed just 0.1%. And for most folks, that's probably a certified loss. But for the engineered option, it is a guaranteed winner. And that's another $5,000, assuming we started with that $2,500 position. Now, like I said, this strategy is not about working harder. It's not about trying to be clever. It's not about outsmarting the market. It's about flipping a very common market move into worthwhile opportunities. For example, we'll go to the next week. Now, in this case, you'll notice that we open up above both EMAs. Once again, algorithms are likely flipping into buying mode. And as expected, the market climbed 1% that week. Now, anyone using a normal option might have broken even, maybe carved out a small gain. But for engineered options, we would have doubled our money for a fourth week in a row.
Now, Chris, it's crazy. That's 4 back-to-back winners, each one worth a perfect 100% ROI. Over the last few years, I've posted, and I'm very proud of this. We've done a phenomenal job, 1,800 winning trade alerts, but I don't think I've ever posted 4 money doubling winners in a row. I mean, that's insane. And I absolutely love it. Anyone who started the month with just $2,500 would have walked away with an extra 10 grand. And keep in mind, that was only 4 of the 31 winning trades we would have seen in 2025. If you stack every trade together, we're looking at 55,000 in net profits. If we look at the last 3 years, the returns would have been even bigger. In total, we're looking at more than $154,000. And as crazy as that is, we believe 2026 is slated to be the best year yet.
I think you're right on that, Lance. And you see, look, most people don't realize it, but the Fed has started injecting significant amounts of money back into the market. This is through a program that's being called right now overnight repurchase agreement, or the overnight repo. Now, it's one of the main reasons why the market popped 6% from its October lows. And right now, the current injections have reached a total of $120 billion, with the next one slated for January 28th. Now, historically speaking, these injections create a lot of upward pressure. And in recent years, the market has rallied anywhere from 10 to 40%. Now, for our particular trade, that is extremely bullish, and it means that the market is more likely to climb higher from a week-to-week basis. And you see, without the Fed injections, these engineered options have averaged roughly 30 money doubling winners per year. Okay, but with these injections, we think that it's possible to see upwards of 40 plus trades with an even higher accuracy. Now, to put that in perspective, that would have boosted our 2025 total return from $55,000 to upwards of $80,000. Now, which is ultimately why we are here today, because tomorrow morning we'll be entering our next engineered option trade. And if all goes to plan, we could be looking at one of many money doubling opportunities over the next year. And if you decide to trade one contract, it could be worth $250. If we trade 10 contracts, $200 or $2,500. Now, if we trade 20 contracts, that could be worth $5,000 in profit. Now, obviously, I'm never going to promise a future outcome. Please do not risk more than you are willing to lose. But if you like the trade with us, it's all part of the brand new initiative that we call engineered options. And over the weeks, they would have absolutely been clutch, because this includes 4 out of 5 trades between Thanksgiving and Christmas. And anyone who took each of these trades locked up $7,500 in profit. And as far as I know, it's the only trading initiative that converts fractional market moves into money doubling opportunities. Now, outside of Lance's team and his team, no one else has used the engineered options strategy. But today, you'll be invited to join us for what I believe is some of the best weekly setups over the next 12 months. And if you followed my work in the past, then you know I'm not just blowing smoke. Here are what some of my top students have said. Here is Sandy. I've made over $10,000 in less than 2 weeks. You're the best I've seen anywhere in more than 15 years of trading. Here is David. Chris is very detailed, easy to understand. I've only had one loss since joining. The rest of the days were all winners. Here's Dave. Since the 19th, 24 for 24 with winners. Lynn started with 4K, ended up with adding $15,000 to that. Here's Phil. I'm making money with Chris, and I'm learning heaps. He shows us why the market is doing what it is, and it helps me with my understanding. Now, here's Don. This is crazy. My win rate is 90.7%. Ken, 16 wins and 1 loss since I started. Chris is great at coaching and managing risk. And look, I'm excited to share these engineered options with traders like Sandy and David and Lynn and Dave and Don and everyone else. But my goal is to blow all that out of the water, starting with this brand new trade that I'll be posting tomorrow morning. In fact, I'll be sharing all of the trade criteria inside of my engineered options Telegram channel. Now, you can consider this the headquarters for all of our weekly trade alerts. And the way it works is quite simple. Each Monday morning, before the market opens, I will post a brand new engineered options trade for the week. And that will include the ticker symbol, the strike price, the expiration date, the entry target, and any trade analysis and comments that I have to go along with it. All you have to do is read it and decide whether or not you want to follow along and take the same trade that I'm going to take. If there's anything like the last year, we could be looking at 30 plus money doubling opportunities, right? And here's the cool part. Each alert will be posted at 9 a.m. Eastern time, well before the market opens. You see, with this type of trade, we can set it up before opening bell and be done with our day. And that's a huge perk, because we don't have to wait for some special pattern. We don't have to wait for the markets to open. We can simply set up the trade before opening bell and get on with our day and get on with our week. For example, look what happened on Monday, December 1st. At 9 a.m. Eastern time, you'd receive your engineered option trade alert. We could have taken the next 2 minutes to enter the trade and got on with our week. Sure enough, over the next week, the market climbed 0.5%. And for the average Joe, that might be barely noticeable, but for us, it was enough to double our money. So please know that there will be some weeks that we don't have a trade. But remember, we're only interested in opening a position if the market is trading above the 144 and the 50 period moving averages. And if it's not, we generally pass as our chances of winning drop dramatically. For example, take a look at what happened on Monday, April 14th. Here is the 144 EMA, and here is the 50 EMA, and price is in the middle. So here's where the market opened. Now, in this case, the market was not trading above both of the EMAs. And generally speaking, that triggers a selling response from institutions, or at least exercising some caution. And as expected, the market moved lower throughout the week. So anyone using a normal option or putting a long trade in would certainly have lost. However, we sat in cash. We safely sat in cash, and that's what we're doing. We're not trying to take unnecessary risks. So if you follow my work, you know that I like to trade often, but only when the odds are firmly stacked in our favor. I don't gamble. I don't speculate. I simply follow the rules that give us the best chance at a winning outcome. For instance, look what would have happened just 2 weeks later. On the week of April 28th, the market opened above both of the exponential moving averages. And in this case, we would have known that it likely closes higher 70+% of the time. And as expected, the market climbed by 2.19% over the next 7 days. And when using a normal call option, would have seen a nice little 80% gain. But if you use the engineered option, you would have seen a full 100% return on investment. Just $2,500 into the trade would have turned into $5,000. Now you double your starting stake and you're looking at 10 grand, Lance.
Chris, I love it. I mean, this really is a phenomenal trade. And when compared to our normal strategies, it's pretty hands off. We don't have to time our entry, we don't have to time our exit, and we don't even have to close the trade manually. As long as the market moves by at least 0.1%, we should automatically collect the full 100% profit. Doesn't matter if we decide to invest 250 bucks, 500 bucks, or 2,500 bucks. It should double over the next 7 days. And with potential like this, I see it's easy for the membership to price at $29.98. In fact, if you went to the Prosperity Pub website, that's the price you'd see today. I mean, it's a great deal. It includes the new trade alerts issued each Monday at 9 a.m., access to the members only Telegram, the trade tracker, the strategy guide and trading manual, and the live trade room access, monthly and quarterly bonus trades, and a few other perks we'll discuss in a moment. But Chris, I know you, and I know you have something special for all of today's new members.
You're right again. And look, now that the Fed is starting injecting money back into the market, I'm expecting these engineered options to be one of my top performing strategies of 2026. Like, I don't want anyone to miss out. That is why I'm slashing an additional $1,000 off the normal retail price. That brings me to an annual membership that's down now to $19.98 for the year. Now, in my opinion, I think that's a pretty insane deal. If you trade with just $1,000, it means you'll have the chance to cover the subscription fee in just 2 trades. Okay. Now, to make it even easier for you, I'm going to do something extra special. In fact, I'm going to split those payments in half. So when you join engineered options, you'll be charged just $9.99 today, and that second payment will be billed just 30 days later. Now, my hope is that we can cover the total cost of the subscription before the second payment is due. Now, that being said, today's discount and the split payment is for founding members only. So in other words, it won't be here forever. Now, if things get too crazy, the team's going to shut it down. But if you're ready to trade and take your engineered options trade with me, take full advantage of today's special discount. So get your credit card out, click the link in the chat, and you can also go to prosperitypub.com/EGO for engineered options. And if you'd like to talk to one of our team members, we are standing by 904-706-3537. Now, look, as far as I'm concerned, there is no better way to target money doubling returns on a weekly basis than with engineered options. Now, in 2023, the engineered option strategy would have done it 30 times for a total profit of $52,000+. In 2024, it happened 34 times for a total profit of $47,000, $47,500. Now, in 2025, 31 times it doubled for a total net profit of $55,000. And now with the Fed pumping money back into the markets, I think that 2026 will be even better. So if you'd like to tag along each week, check out the link, prosperitypub.com/EGO, or give our team a call, 904-706-3537. And again, don't forget that we are splitting the payments in half. So that's just $9.99 down today, with the other half automatically billed just 30 days later. However, if you'd like even more savings, I have one more special perk for you. It is a way that you can save an additional $500 today. You see, once you complete the order form, you'll be directed to a secondary page. Now, on that page, you can choose to make the second and final payment today, right? And so if you do that, then we'll slash the additional $500 off your total membership cost. So if you're all in, go ahead and save that. That effectively takes your subscription cost down to $14.98 for the year. Now, obviously, this is not mandatory, but I did want to offer this special savings for my founding members if anyone wants to go in, jump in, and be all in with me for 2026. But again, this deal is for only founding members who take action today. So if you haven't clicked the link in the chat, go ahead and do that now. And in the meantime, Lance and I will answer some of the most common questions. Lance, you want me just to run through these?
Yeah, let's get into it for sure.
Okay.
Uh,
So
Chris,
go ahead.
let me ask you, how much does
Yep.
it cost to take the average trade?
Yep, it's a great question. So generally speaking, one contract should cost about $250. And let's see here, $250. And look, I think that's a pretty perfect amount if you have a small account, so we can trade this very cost effectively.
Yeah, I agree. What's super cool with this is you can do it with a small account out there. You don't have to have a six-figure account or $1 million account. You can start with a couple grand or 5 grand or 10 grand, and that's what's super, super cool.
And look, just like what happened back in May, I mean, we had profits of $250, $250, $250, $250. You bank an extra $1,000 for that month. I want to say this too. If traders are thinking, man, $250, Chris, that might seem a little much. We can also trade for as little as $50 risk. So we'll talk about that in the class this week. But so it is on my standard trade is going to be $250, but we can take this down to as little risk as $50 a week.
And that's what it's about right now, especially in this market, is making just a little bit of income, doing it each week with a higher probability. And what broker account do people need to do this?
So I would say whatever broker you have, this works with most major brokers out there, US, non-US. So Robinhood, Tasty Trade, Schwab, E-Trade, Interactive Brokers, Robinhood, Webull, right? I mean, these brokers, if you have an IRA or cash account, you can still trade this. You have a margin account, you can trade this. I think we have another slide on what permissions we need, but let's keep going.
It's very friendly. That's what's super cool about
cash or
it.
margin, you're going to be fine.
Right. And with the engineered option, is there any risk of assignment?
No. There's no assignment risk. The ticker that we will be using is a cash settled instrument, meaning it is impossible to be assigned even if our trade loses. The broker takes care of it. It is cash settled. It is purely defined risk.
And do you need any special account permissions?
Yep, I got ahead of myself here. So if you have Tasty Trade, go for the works. If you have Robinhood or Webull, you're looking for a level 3. If you have Schwab level 2, level 3, Interactive Brokers level 3, Lance, you and I say this to a lot of traders. We want you as traders to have the highest permissions possible.
Yes.
But basically, if you're a level 2 trader, you can take this trade. If you're a level 2, just get what you can, but you can be level 2 and take these trades.
And I know, Chris, you are one of the best teachers I know in training. And is there any additional classes once people go to prosperitypub.com/EGL and get signed up?
Yes. So I will probably overteach this class, but this Thursday, I'm going to be hosting a members only masterclass. So all my founding members, all my people jumping on board with engineered options will have a masterclass this Thursday. And my plan is to walk you through all of the granular details of the engineered option and how we can, make money with these tiny little fractions of 1% moves and still go to double our money. And that includes the tools that I use, how we set up the trade, look at our levels, and how we also have some defense trades to hedge ourselves instead of taking losses. Okay. On top of that, I'll even show how to kind of double dip the same week. So essentially turning one winning setup into potentially 2 winning trades. Here's an example on May 19th. Our normal engineered option would have produced its standard 100% return. But using my double dip approach, we could have actually doubled our money for the second time in that same week, which is kind of nice. So $2,500 into each trade would have actually walked away with a $5,000 profit for 1 week. Okay. So, that's what I'm going to do a lot is we're going to teach a lot. We're going to talk a lot. And that's a lot of the bonus trading that I have, but that's not it. We're going to do more. If you jump on board with engineered options, I'm also going to grant you access to my practical options training course. And that is a 9-module video series that I teach to show how I like to trade options. I've actually, offered this course a la carte for $497, and I sell this everywhere. But today it is yours as a member of Engineered Options at no extra cost.
And Chris, is there a lifetime membership out there?
Yes, we have a lifetime membership. And if you do upgrade to lifetime, then I will provide an Engineered Options trading dashboard. So that way, at a glance, just like I'm going to do, we can validate our trade setup. We can select the options, know exactly the levels we're trying to trade. And this will offer us multiple opportunities each and every week. So that'll be another free addition for lifetime members.
And how long do we hold each trade?
So we talked about this weekly option, and based on the engineered option criteria, we are going to look at the trade for 7 days. So typically, the goal is to put in the pending orders on Monday, let them fill, and that said option will expire the following Monday. The goal is to have us close out for full profit within 7 days. So you can close the position early, right? If we have most of our profit, we can always take the profit early. But the goal is to particularly have this trade be managed hands-free. So, Lance, I know you and your team have called this kind of a set it and forget it type of trade, especially since it's risk defined. And as long as the market gains about 1/10 of 1% over a 7 day span, we should see our full 100% return. So if we take a look back here in December, the market gained just 0.27. We had a lot of these examples, 0.1, 0.3, 0.27% from December 15th to the 22nd. And normally that wouldn't be worth much. But thanks to the engineered option, we could have flipped this teeny tiny move into a full 100% return on investment. So if we traded just one contract, we could have made an extra $250. 10 contracts, you're talking $2,500. 20 contracts, an extra $5,000. So I'll say this: if you haven't clicked to sign up in the link yet, go ahead and do that now. And in regards, check out the membership details on the next page.
Yeah, and folks, if you're having reservations, I get it. Trading can be hard, especially in this market. But it becomes much less difficult when you're not reliant on big market moves. And that's what makes the engineered option so revolutionary. For folks like us, we now have the chance to target 100% returns even from the most modest market moves. The numbers, and I'm a numbers guy, they speak for themselves. In the last 3 years, these options would have doubled our money 95 times with an accuracy upwards of 70%. Total profit, $154,000. That's $154,000. That's why I want you to try these engineered options with Chris and I over the next 14 days. If at any time within that 14-day window, you decide the strategy doesn't resonate, simply call our team and we'll refund your membership costs. Although I'm pretty confident that won't happen. Chris has done everything possible to make sure we have the best possible chance at success week in and week out. So if you'd like to join us, click the link to take your first step. When you do, you could be one step closer to joining some of Chris's most successful students like Troy, who says, "No one can hold a candle to Chris." Wow, Chris, that's huge out there.
High
And
praise.
Kathy, I mean, she's crushing it. With my account size, I'm up $1,000 a day on average.
Mm-hmm.
And John said, in 1 week with you, I've paid 50% of the membership. Plus, I'm learning so much in the process. Joining is a no-brainer. Thank you, John. And David said this about you, Chris. I've made over $30,000 with you, and I started with 25,000 capital. Dan said he paid for the service in 10 trading days. Larry, I'm up 67K since joining. And remember, Chris will be sharing the next engineered option tomorrow morning, 9 a.m. So if you want in on the action, please go to prosperitypub.com/EGO. If you have any remaining questions, we'll address them right now. If you want to get signed up, please go to prosperitypub.com/EGO, or you can call 904-706-3537. Remember, Chris made this a deal, so you only have to pay $9.99 due today. Chris, I just love deals so much. That's only one payment of $9.99 due today. And when you do, because there's no way you're going to have to pay retail, Chris is going to hook you up. That's only $9.99 due today. You get the engineered option trade alerts. You get the members only Telegram channel where Chris is going to over deliver, especially in his education with the master class, the trade tracker access so you can see all the trades that we showed you today. You're saving $1,000 webinar discount. So if you get signed up, if you're watching this, and you call 904-706-3537, or you click the link, prosperitypub.com/EGO, you will save $1,000. You will get the strategy guide, the trading manual, straight from Chris, the practical options trading course. Here's what's really important. you get the live trade room access where you can see how Chris does this each and every day. It's very, very important. And of course, he's going to over deliver with monthly and quarterly bonus trades, and you're backed with a 14-day money back guarantee. Chris, when you started showing me this about 60 days ago, I was pretty hesitant. You showed me the numbers, and I'm a numbers guy, but I said, could this really be done? Especially, let's say someone's just starting out. And I started executing the trades. I started seeing your logic, and you really go into detail of each level in the market. And what's super cool, especially for me, is it's a trade because I'm very busy too, and I still do my directional day trading and swing trading. But I can do this trade every week, and then I don't have to look at it. It takes me about 2 minutes to put on. I don't have to look at it anymore. I don't have to manage it. I don't have to, buy low and sell high. Then the trade expires because it's such a great instrument. And I know you go into details with this, but you pay less capital gains when you trade it too than other products, which I love. And that's it. You don't have to do anything. You just place it week in and week out. You've had such a high win rate. I mean, it's insane. And the money doubling opportunities that we have seen over 30 a year for the past 3 years, I mean, has truly been remarkable. And we were talking before this, and 2026 is starting off fantastic, and we think we're going to see even more money doubling opportunities this year than more than ever.
Yeah, I think we'd be really surprised how many weeks and how many months, just even if they just barely carve out a positive win, that's all we need. You know what I mean? So everyone that's been chasing the 20+% years and that it's long in the tooth and over its season, we can't possibly produce another positive year. Look, we have all of the right tailwinds to let this market continue to drift higher. I do think there's going to be some volatility along
Yes,
the way.
I
We'll
agree.
obviously assess that. If things go into indecision areas or go to bearish areas, we will not be in. We'll be trading, we'll be cash and waiting. But when things align for us, we'll be participating. This is one of the very few strategies that I trade, by the way, that every account that I look after gets this strategy. That's saying something because that's willing to say on every account that I trade, I like the strategy enough that I can set it, forget it. It also is pretty easy to manage considering I've got, I'm placing, 20,000 trades a year. And this is one that, everyone gets a piece of the action, which is kind of fun.
Yeah, and it's what I like about it too. It's very simple to execute, and you don't have to be like a market wizard to do. And that's important because I think when a lot of people think of the stock market, they think, oh, I have to buy the next Nvidia or I have to buy the AMD, and then I need the stock to go up 10, 20, 30% or so for me to make money. And I don't think this year that's going to happen. I don't think you're going to go buy
Agreed.
uh, Nvidia and then it goes up 50% or I don't even think 20%. I think a lot of that easy money, quote unquote, has been made. So
Yep.
now, instead of chasing the next hot thing, why not do something that's backed by numbers? Why not do something that you can do week in and week out where you have probability and math on your side? You don't have to time the market perfectly. That's the beauty of this. You don't have to be glued to your computer. It's a trade you can do on your Schwab or your Robinhood account from your cell phone. And it just takes a couple minutes once a week to do, and then that's it. And if little singles, I don't even call them little, Chris, because you're risking one to make one, which is actually
Right.
phenomenal.
Right.
So they're not, but it's not finding the next penny stock that goes from $1 to $10. If hitting, we'll call it doubles. When I played baseball,
Yeah. Yeah.
I batted first, so the most important thing was getting on base, right?
Hmm.
If you like stacking wins week in and week out without having a ton of risk, where you're like, oh man, if it doesn't work, I'm going to lose money, or I could, blow out your account. If that sounds good to you, where you can do this week in and week out. Maybe you're putting $1,000 of that's it, and you're looking to make $1,000 a week. That's 4,000
Hmm.
extra a month. That really
Yeah.
adds up. If you can do that, that's how we were able to show those stats where Chris was looking at those returns of possible 50, 55,000 a year from this strategy based on a starting stake because you didn't have to do anything crazy out there. Now, if you're into turning $1,000 to $1 million, that's fantastic, but there's a very low probability that's happening. But if you can do this week in and week out and have time in the market, because that's more important than time in the market, and just do it and have it compound week over week, that's how you're really going to grow your capital. And Chris is one of the best teachers I know to share the strategy with you because he trades, like he said, he trades a lot and he trades a big book. He trades a lot and he specializes in this one strategy. So once you learn it, you'll be able to do it and hopefully on your own. And you can go to Chris's trainings, he'll give you more insight. And maybe you're actually doing more of these. Maybe you're doing 2 a week or 3 a week, and you're having more potential to profit in this market. And this is the perfect market, Chris, for the strategy for sure, too.
Yeah, I think so too, Lance. And I do think I hear this a lot, and I acknowledge that. I come to the markets every day with a lot of energy. I don't drink caffeine. This is just honestly like the energy of the market just kind of keeps me enthusiastic pretty much all year. I need a little downtime every year around Christmas time. Give me 1 or 2 weeks off to decompress, but it's clean slate, ready to trade for 2026. And look, I really think that this year is going to be obviously an interesting year. We could have the melt up trade that continues. Just the kind of the Goldilocks environment where we have government fiscal policy as well as now more quantitative easing, the overnight repo and the Fed injecting stimulus, which I don't think they're going to stop at 40 billion. I think they're going to kind of up that to maybe 50, 60, maybe 80. There's talks of this whole idea of like we have midterms, we have policy risks this year. I think that Trump and company want to have the best scorecard, which is the markets at all-time highs. We're trying to improve the affordability narrative, which is, we need housing prices to come down. We need rates to come down. We need, debt restructuring and refinancing to be improved, or else this K-shaped economy is going to continue to get worse and worse and worse. So I don't think that this administration wants to mess with the top end of the curve. And certainly they're hoping to kind of U-shape the bottom. So it just kind of helps a little bit everybody. But there's a lot riding on 2026. And I think when you have a lot to lose from a political side, they're going to try to juice their side. And then you have the Fed that's also playing classic backstop like they've done for the last 15, 20 years pretty regularly, where as soon as something goes wrong, everyone's turning their eyes to the Fed and saying, hey, when are you going to fix this? Right? It's like we had regional bank crises in 2023 and the Fed immediately backstopped it within 24 hours. So these little fires that do end up popping up are put out almost immediately, and it's done a lot by monetary policy. And right now we just have heavy fiscal policy, and that's not just in the U.S., Lance. That is globally, and this is another big tailwind for overall assets to continue to rise. So do not fight the AI trend. Do not fight the overall markets. Don't fight the positive drift. Don't fight the overall trends. Path of least resistance is let this thing continue to do what it does best. Look, all we need the market to do is if the market's interested in being break even or a fraction of 1% higher week after week, month after month, quarter after quarter, year after year, we're going to make a lot of money. And we're doing it with those money doubling opportunities. So again, structurally engineered for good risk reward. And we took all these amazing historical edges, and they're actually even better because of the current environment with the Fed and the government and where the market has been. It's like we've financialized the game. It's almost like you have to see the stock market go higher because everybody's in it, and the U.S. has the biggest, most liquid markets in the world. And look, at some point it will probably stall, or it'll probably go into a bear market again. But like we said earlier, it's like when things aren't aligned for us, we will be in cash. And look, I want to make everyone aware that when I did test this strategy, I was willing to trade every environment. So I did trade the market regardless, up or down. It's like if I have bearish alignments, I'm going to be short. If I have bullish alignments, I'm going to be long. And I did that for an entire decade. But what I discovered is even though it was still profitable, my profit factor was significantly less when I tried to trade the market both directions. So if I just stick to the long, drawn out, week after week, month after month, we have seen literally years of mostly undisturbed bullish markets. Yep. And that is what we align with. I mean, it is a lot more enjoyable to know that week after week after week after week, month after month after month, it's just steady gains, and it doesn't take much. A fraction of 1% is all we need. That's it. Yeah, I mean, so the chasing, like you said, like individual stocks that are ripping 100%, chasing the next big thing, the next hot needle in the haystack. It's like, I don't know what that is. I think if anything's going to happen with AI, it's going to be that the climb to the top is going to be so competitive that you can have NVIDIA at the top of the food chain And then it's going to be Google and Nvidia going head to head. They're going to knock each other off, and it's like, who's next? And I think there's going to be a lot of disruption for the top, market cap companies. And honestly, for smaller companies that are lean and mean, where the margins are substantially better, they're a lot more agile for gains as well. So that, broadly speaking, helps the overall market go up. And like I said, with fiscal policy globally, this helps lift assets. And so, we want to participate. I think the markets exist for people to participate with vehicles that help us generate profits and be long-term investors. And if one thing I could say for this year in 2026, you probably do this as well, Lance, but there's a lot of times where we look at what we do as traders and you're like, I could probably do this a little bit simpler. I could probably focus on way less things and just go for, where is my bread buttered? Where is my trade going to be probably the highest probability? Where's my return on capital going to be the easiest and the best? And that's what I sell in here for engineered options, which is, I don't want to take a $400 risk to make $100. I don't want to risk $900 to make $50 or $100. I want to make, $50 a week, risking $50. I want to make $250 a week. I want to make $1,000 a week, only risking $1,000. If I lose a trade and I win a trade, I'm not out anything. I can get right back in and start climbing up with my gains. So it's just a faster way to, bulletproof that portfolio, not have big losses. And I will say this, I mean, we're doing a 14-day money back guarantee, but I'd say for any strategy out there, if you're following Lance or myself or anybody else, if you're going to be in a service, I would hope you're willing to commit. Give me 50 trades with me. Give me 50 trades. Give me 100 trades. Let's see what we can do together. Because what I have shown since I've been with Prosperity Pub is the last year and a half. I mean, I have logged well over 1,000 trades in the last year and a half that I've been with the company. Yep. And we have had, on the lowest end, win rate of 59%, on the highest end, win rate of 96.8%. We make money, but you got to give me more than one trade. You got to give me more than a couple weeks, to be honest. So if you're with me, you should stay with me for the year. Like, jump in, grab your $9.99, build today, build 30 days later, and let's learn the process. You can do it forever. This is a skill set that you always will have. And I'm knowing that when you come and join me every single day in my live trading rooms as well, I will open your eyes to a lot of variety in the markets. If you can think of a trade, if you want to be bullish, you want to be bearish, you want to be neutral, there's ways to trade that using options. And that is why it is by far my favorite tool to trade.
Yeah, and what's very, very important that you mentioned too is, if you think about, you're risking $100 to make $100, and you're doing that not with a 50% win rate or a 51%, which technically you would have an edge, but you're doing it, Chris, with over a 70+% rate. Let me repeat that. He's risking $100 or $1,000 to make $1,000, or $250 to make $250, or $500 to make $500 each week. And he's winning over 70% of the time. That is just truly phenomenal. That's what sparked my attention and why I wanted to work with you over these past 60 days that we've been doing, because if there's some kind of probability, Chris, if you came to me and said, hey, Lance, I have a 56% win rate, and every time we're risking $1,000 to make $1,000, my ears perk up for that. But when you said over 70%, I mean, it's truly remarkable. So if you can, gang, please go to prosperitypub.com/EGO. It's only $9.99 due today. You're saving $1,000, or you can call that number 904-706-3537. The link should be in the chat. Just click it. You'll get signed up. Chris has the trade alert. He's doing each and every week. It's waiting for you right now. And the beauty of it is, you don't have to rush to get in. You don't have to do anything complex. It's very simple, very easy. Chris is going to train you on this too. So not only are you going to get this